All right. Hey, Dave, thanks for having me back on. And traders, thanks for being here. I've always enjoyed presenting at this forum, and it's good. So today I want to talk about trading beyond the Magnificent Seven, scanning the entire market for great trade setups. And I'm Dean Jenkins. I'm the founder of Follow Me Trades. We offer subscriptions to stock picks and some education. And I've been doing this a really long time. All right, so you hear a lot in the news about the Magnificent Seven. It's Apple, Microsoft, Google, Nvidia, Amazon, Meta, Tesla, and there's always some group of what I call marquee stocks. It was time when it was the 4 or the 5 horsemen, included Intel, AMD, Microsoft, right? But there's always these marquee stocks in the news, and when I talk to traders, and I've talked to thousands of traders, since I've been doing this. People tend to focus in on a pretty small handful of stocks, and so the buzz today is the Magnificent Seven, these listed here. But there's more to the market than this very small bucket or handful of stocks, right? And the Magnificent Seven haven't really been all that magnificent recently. If you look at the results, they're overall most of them down, and they were high flyers for a while, and that's why they were in the news. But what I want to point out and suggest you look at is look beyond the Magnificent Seven, right? There's a much bigger ocean out there of companies and stocks to trade, and while those marquee stocks were struggling, there was some really good other companies to trade, right? KHC, First Solar, Chevron, ConAgra, Oxy, right? These were all doing great, and that's not just a snapshot I went off and grabbed. These were real trades that were identified in our Real Traders Club, and these are real companies. I don't trade junk. I don't trade penny stocks, over-the-counter stuff, right? These are great real companies with liquidity, deep option markets, a serious market cap, real companies, right? You're not going to get burned. All right. So, when I say, hey, let's look beyond the Magnificent Seven and try to find some great trade setups, how big is that pool? Well, if we just take the two, biggest exchanges in the United States, New York Stock Exchange and the NASDAQ, right? NYSE's got 2,800 approximately publicly listed companies trading. NASDAQ's got 3,300. So just the two of those, that's 6,100 companies. So why only look at 7? Or you may be looking at things beyond the Magnificent Seven, right? There's always something in the news. I remember when Chipotle was, oh man, we got to do this, and Broadcom, we got to trade Broadcom. My question is always not how do I trade Apple, but should I trade Apple, or is there a better trade out there, a higher probability, bigger profit target, bigger potential reward? So that's what I try to look for. Right now, I said there's 6,100 publicly traded companies on the two biggest exchanges, but not all of them are good swing trade. I'm a swing trader, right? I trade stocks and ETFs, and I primarily use very simple option strategies. I'm just looking for a directional move in the relatively short term, a week to 3-4 weeks, something like that. High probability setup, a good move, get some profit, right? So again, not all publicly traded companies are good swing trade candidates, right? So my criteria is like, what is a good candidate for swing trading? Well, I want mid cap or above. It doesn't have to be, it doesn't have to be the world's biggest conglomerate. It doesn't have to be Microsoft, right? But I want a real company, so at least $1 billion valuation, right? I want good market liquidity. I want deep liquidity in the shares, and I want there to be a good, deep, tradable liquid options market. I want it to be optionable. I look for share price between $5 and $200. I've heard some people go, I'm not going to trade a stock under $20. Well, or some arbitrary number, right? GE traded for under $10 for a while, and they finally realized that you know, that threw some people off. So they did a 10-to-1 reverse split. Now it's a $100 stock, right? But you know, nothing wrong with GE, and it was a sub $10 stock. I say I cap it at about 200 because I trade with options, and I use, you know, straight. You know, if it's a bullish trend, I want to go buy in the money calls, and if it's a bearish trend, I want to go buy in the money puts. Right, and if you're trying to do that with Chipotle or Costco, right? These, you know, these stocks that are at 1,000 or, you know, some are $3,000, right? Those option contracts can get really expensive, and I like to have, you know, multiple contracts so I can manage the position and scale in, scale out. And I'm also, you know, sending alerts on trades to a wide variety of traders. So I want, you know, the signals we give to be affordable for everybody who have, you know, a wide variety of account sizes. Nothing wrong with trading Chipotle or Costco, but I just focus on, you know, the ones that are, you know, between this range, $5, $200, so that the contracts are affordable. We can get multiple lots. We can manage the trade, have some flexibility. Right, and I want it to be on a major exchange, New York Stock Exchange, NASDAQ, not over the counter, not penny stocks, none of that stuff. And so this, you know, I'm a technical trader, and I look for technical setups. Price pattern is the most important thing to me, far more than any indicator. I just want to look at the chart. I want to see what price is doing, and then I use a few indicators to help me confirm and interpret what's going on there. Okay. So this is a screening I do, you know, before I'm going to do any technical analysis and even look at a chart. And let's get a real company, right? That's got some liquidity that we can trade, right? So I just do that screening before I even start doing any kind of technical analysis. And I just put in a screenshot here, right, of using the Charles Schwab screening tool. We're going to talk more about tools here in a minute, right? But I just said, hey, NASDAQ, New York Stock Exchange, here's my price range, my market cap, my average volume, and make sure it's optionable. And that brought that 6,100 stocks down to 986 yesterday when I took this snapshot. So I'll call that 1,000. Well, 1,000 is still a big ocean of potential stocks to scan and to try and trade, right? I don't have to focus on 7 or, you know, whatever is in the news, right? Because quite often there are trades that have great setups that are just not in the news, right? And just to pique your interest, maybe to prove that point, let me show you. You know, I'm using Thinkorswim. You know, that I think it's now the most popular trading platform. Of course, it's owned by Charles Schwab. Look at this trade that we found through the screen, and then I'm going to talk about Kava. Right now, I mentioned Chipotle. I guess Kava. They're not in my region. I live in Olympia, Washington, in the Northwest. We don't have Kava here, but apparently they're a big deal. Other parts of the country, it's kind of like Mediterranean Chipotle. Right? Our screening, and we actually called this trade out, triggered it in our Real Traders Club, right? Triggered back here. If you look at what's the move for the month of May, right? And we're here on May 8th, right? Or this actually triggered back here around the 22nd or something of April, right? What's the move on Kava? Well, from $60 up to today's current price, $74.61. It was around that. Let's call that a $15 move, right? What's a $15 move on a $60 stock? That is a 25% move. Did you see Kava in the news? Are they part of the Magnificent Seven? Absolutely not. Would you like to be in that trade? I assume the answer to that would be yes. Okay, so that's kind of the point we're trying to make, is that there's lots of trades out there beyond the Magnificent Seven, beyond these marquee, high-flying, high-profile companies. Okay, so I'm a technical trader, right? And most of the free and simple screening tools won't find the patterns and setups that I'm looking for, right? I use trend confirmation from Dow theory. You know, what's that say? It says, you know, hey, an uptrend is higher highs, higher lows, higher highs, higher lows. Downtrend is lower lows, lower highs, lower lows, lower highs. A trend change is when it goes from higher highs, higher lows, higher highs, higher lows to lower lows, lower highs, lower lows, lower highs. Say that fast, right? So, you know, I'm just looking for trend confirmation. Well, the screeners aren't going to tell you that, right? I use an incredibly simple version of Elliott wave. I'm just looking at impulsive and corrective waves, right? Because, and there's, I've looked at, a good handful of Elliott wave indicators. I think they're all too complex. The approach to Elliott waves too complex. What we know is when there's a big impulsive move on a stock, there's almost always a correction. And that correction, here we look at Kava again, right? This is an impulsive move, the thing went straight up. Then there's a correction. Well, guess what? They almost always correct to Fibonacci retracement levels, right? Which is what Elliott wave says. There's the expected retracement level, and it came right to it, these green lines. Simple, right? Hey, big impulsive move, it's probably going to correct. Where's it going to correct to? Fibonacci retracement level. After that, it's probably going to extend onto a new impulsive wave. Where's that going to go? Fibonacci extension levels. But look at that. I use a custom version of Ichimoku cloud. You can see the cloud here, right? I got rid of all the lines. Is it green? Is it an uptrend? Is it confirmed? Or is it red in the downtrend, right? What's the edge of the cloud look like? Wider cloud, stronger trend. Narrower cloud, weaker trend. Simple. I believe in keeping things simple and repeatable, right? So I said most of your free, simple screening tools are not going to find the patterns and setups that I'm looking for. Probably not what you're looking for either, right? Whatever indicators and setups you use, right? The screening tools, they do good with fundamental data. They do good with some simple technical data. They're not great at sophisticated indicator screening, but these free tools can get us to a short list to analyze. And when I'm doing screening, what I'm going to do is do an initial scan based on that criteria. Hey, is this a real company? Does it have good liquidity, good volume? What's the price, right? Is it on a major exchange, right? And then I look for, is something new happening with this security? And moving averages are great for that. Is it crossing a moving average? Do we have a moving average cross, a two-line moving average? And you can pick different time frames. Did the 10 and 20 cross? Did the 20 and 50 cross? Did the 50 and 200 cross? Did the price move across a moving average line? Those mean typically a resistance area has been broken, a support level has been broken, something new is happening, and that's what I'm interested in. Is it a new impulsive trend? Is a impulsive trend ending? Is it now correcting? And so a quick scan using 3 tools is available to come up with a list of candidates that may not be in the news, you may not have even heard of, right? I don't know if everybody heard of Kava right before I brought it up. I hadn't until the scan brought it up. So again, these free tools can get a short list. Before I'm going to trade anything, I'm going to put it on a chart. I'm going to do my analysis for sure, right? So these tools can just help us come up with a manageable short list for scanning the entire market of legitimate tradable securities, and then let's put it on a chart. Let's look at it and go, oh look, that's a good setup. All right, got to use something to draw your attention, to a manageable list, because I can't go put 1,000 charts, 1,000 stocks on a chart every day, right? That's just unmanageable. And I'm seeing if I can monitor the chat here, see if there's any questions that come up. I don't see anything yet. Dave, yeah, just let me know, Dave, if there's I haven't used GoToWebinar in like over a year. Anyway, let's go look at how this works, okay? So there's plenty of scanning tools available out there, and I'm looking, breaking news, Google employees question execs, decline in morale. CNBC is a great site. It gives you the headlines, what's going on, what's the overall picture of the market. But that's not for scanning, right? One place you can look is just this SPDR site, Sector Spiders. They have the big index ETFs, right? The SPY, XLC, XLY. Right? You just look at this and go, so what's going on with various sectors? Real estate's down. That's interesting. Technology's up, right? And you can draw your attention and go, maybe I should go look into this sector. And this site is great because you can, not only will they give you this picture and you can change your time frame, whatever you want, you can go drill into these particular ETFs and they'll give you the holdings. You know, here's the 20 companies that are in the communication thing, and you can go look at those. That's a cool deal. Finviz is an amazing site. I don't know if you've ever looked at this, but Finviz is cool. Financial visualization is what that stands for. You know, one of the coolest thing they have is this heat map, right? That shows the whole market, right? And this is set on a, you know, one day. It's delayed data, 15, 20 minutes. And they got lots of ads, and you can pay for an account and get rid of the ads. But I ain't gonna. But you can just look and go, wow, you know, who's up, who's down. Bright green means it's up. The size of the square means the market cap. You go, okay, oh, industrials are, you know, kind of greenish. This is cool. And they have screening tools. And their screener tool, how do I get rid of this? Wow, close. So their screening tool will do everything I'm going to show you. I'm going to show you on Schwab. But the Finviz screening tool, right? You can choose your exchange, you can choose your market cap, you can choose your price, your volume, all that stuff. You can do some simple technical screening for moving averages and stuff like that. And this is free. You do have to sign up. You have to give them your email. You can see I'm signed in, right? But it doesn't cost anything. And it works, and it'll do everything you need. And you just got to deal with these continuous pop-ups, because on their free account, that's how they make money. Whatever trading platform you have, you know, if you got TradeStation, they got a great screener. I really like TradeStation screener. If you got, you know, Robinhood, you got Tastyworks, Tasty Trade, any of those are going to have screeners. You know, I like using the one from Schwab. It's simple, it's clean, and if you have, you know, if you used to have a TD Ameritrade account, now you got Thinkorswim, guess what? You now have a Schwab account because Schwab bought TD Ameritrade, and this is included, right? You can go onto their website, schwab.com, and they got these research tools and they got screeners. You do have to screen separately for stocks and ETFs, but you can, you know, here it is, stock screener, right? And you can use their predefined ones here if you want, right? Or you can go create your own, and they got a ton of criteria here. It's really, really good. And so if we look at just this basic criteria that I talked about, here it comes, right? And that criteria, you know, I said, hey, I want it to be on a real exchange. There's a price range, $5 to $200. You know, the average volume, make sure it's optionable. And that gets us, you know, yesterday it was 969, today it's 1,062, about the same. And it's going to change day to day as prices and stuff change. All right, that's just a basic screen. But then I can do other things. Once I've got, you know, hey, let's just have this initial cut of legitimate companies, right, that have good liquidity that I would be willing to trade if there's a good setup. Now I can do some other. I can use some technical indicators, right? And so we go down here to the technicals category, and I can say, hey, show me things with a, you know, that meet all that criteria with a 10 and 20 day simple moving average cross. So why does that matter? Well, you know, something new is happening. We had two moving averages that crossed, right? And I can, when I select that, I can select whether I want that to be a bearish cross, meaning the short term went under the long term, or a bullish cross, the opposite. I can apply that. And it goes, okay, here's 15 companies that met that criteria. You know, they meet all your initial criteria, you know, for market cap, price, optionable, volume. And then these have had a bullish 10-day cross over the 20-day simple moving average. Encore, Brookfield, you know, DocuSign. Wow. And that's 15 companies. Okay, Roblox. I can go look at 15 charts, and I can probably do that in a few minutes, and then apply my technical analysis and see if there's something there that I would be interested in trading. I can also switch that to bearish. Maybe I'll look, you know, hey, I want to see what's going down. Same indicator. Now, what are the bearish ones? Oh, there's 3. Right, there's 3, and I can go play with, you know, 10 and 20, 2050, 5200. Right? What's the distance above a particular moving average? 10, 20, 50, 200. What's the distance below those same? Right? You know, here we got Airmark, British Petroleum, eBay have bearish crosses to the downside on the 10 and 20. What I want to do is, you know, I'll come in here, I'll just play with these settings, right? I've got a qualified initial list, and I'll play with the settings and go, what's some candidates, right? And then, of course, we're going to go put these on a chart over here on Thinkorswim, and we're going to do some technical analysis. We're going to apply our, you know, whatever your setups are that you like, whatever the indicators are that you like. This is what my chart looks like. Try to keep it simple, right? I've got a 50-day moving average. I got a 200-day moving average. I've got my simple version of Ichimoku Cloud, and I got a price oscillator. Helps me see the momentum and whether there's divergence in the momentum. And then I'll use these Fibonacci retracement lines after a big move. Where's it going to go? Okay. So, you know, that's my approach. How we take, you know, the 2 major exchanges, NYSE, NASDAQ, 6,100 stocks, get that down to 1,000, and now get this down to, you know, 5 to 10 stocks that I can put up on a chart, see if we got a good setup, right? I don't have to limit myself to the Magnificent 7 or any other very, very small universe of stuff, right? The big ocean. Let's go catch some fish in there, right? Okay, so using that methodology, let me show you a couple stocks, a couple trades that I like right now. What about XOM? ExxonMobil. Okay. So, what, you know, price action matters to me more than any indicator. So the first thing I do is just stand back and look what's going on. Oh, we had a big move, really big move from just 95 up to you know, call that 123 or something. Well, that's a pretty big move, right? And now it's correcting, and it's coming on to the 50-day moving average. Back here, that was a critical support area. So far, it looks kind of like a support area. So I'm thinking maybe XOM is about ready to head up. And I can also use my tools here. How much did it retrace, right? There's wave 1, 2, simple Elliott wave. Oh, it retraced right into this Fibonacci retracement zone. That's cool. If it were to extend, where would it go? Wrong tool. All right, if it were to extend, where would it go? Boom, boom. Oh, nice, target zone up over 128. I like that. So how would I know that it's going to take off? Because right now it's in a downtrend, lower lows, lower highs, lower lows, lower highs. Well, it would need to take out. So I want to see it prove that it's going to head up, get above this resistance level, and then I'd put a stop down here, and then I would call that a trigger level, 118.90. If it triggers, then I'm kind of interested in that trade. All right, that's an example. Another one, if you want, you know, so I would watch XOM. I would also watch Canopy. Right? Canopy had a 50% jump when the U.S. government said, "Yeah, we think we're going to really do this, reschedule cannabis." Right? It jumped. Now it's pulled back, but look, it's done that, right? This thing's like a stair step. Get rid of that. Go away. Okay, it's like a stair step. Wow, 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 wow. So if it finds support and starts up again, kind of proves it's going, it could go higher, right? That could be a great trade. It's not ready yet. You got to watch for it. Okay, that's that's my thing. Look beyond the Magnificent Seven. Look beyond a small handful. Go find stuff that's super interesting. And so if you like what I'm talking about here, you'd like to be part of it, let me show you. We have this thing called the Real Traders Club. We meet daily, for half hour to an hour in the morning, right after the market open, right? And we scan together, right? Myself and another person on my team co-moderate. We got a bunch of people that, hey, what about this? What about that? And we kind of pull those ideas, we qualify them, and then we list them. And we create a watch list. And we put in some trade criteria. And so there's the watch list, waiting for stuff to trigger. And then these ones have triggered. Yeah, they hit our trigger like I showed on CGC and Exxon. If it gets to this level, that tells me something new's going on, right? And these triggered recently, May 3rd, May 3rd, May 3rd, May 7th, May 7th. And these are in profit, all but one, right? So 1, 2, 3, 4, 5, 4 out of 5 are in pretty decent profit for short-term trades. So pretty happy about that. I think, Dave, there's the order. You're welcome to join. The offer is, hey, get a full year of our stock and option picks and our Real Traders Club, right? There's an introductory offer. The list price for this, $647. Hey, you're new. Maybe you're just hearing about me, right? You can join for $247, which is a 60% discount. And you can join and only pay $1 today. If you're going to join a service, I think, I should have to prove that this actually works. So you join for $1 today, and I have to show $250, just round it, right? During the rest of May, right? Basically, I have to earn, and you have to be able to earn in trades that we trigger on the watch list and that we send alerts on, right? Earn your money back, right? Basically get in for a year for free or more, better, right? So you can get access right now. You can join us for tomorrow's live session. You pay $1, and then if I can show at least $250, which is a pretty low bar, between now and the end of May, then we'll build a balance of 246. There's the order form. Make sure you check this option right here. I'll pay $1, right? 2 payments, right? $1 today, 246 later. That's the way the order form structured. I can't make that go away. But if you're interested, we'd love to have you sign up. And again, looks like Dave has put that link in, and it looks like my time is almost up.